Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be asking Steve about what happened at yesterday's Fed meeting and where the markets go from here. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Steve, Chairman Powell spoke yesterday afternoon about his game plan to fight inflation. Can you give us your take on what this means for the markets?
Sure, you bet, Allison. Obviously, yesterday was a big day for finally getting some clarity from the Fed. It's their first Fed release from 2022, and we kind of got what we expected. Ultimately the Fed did not raise rates, so they kept the rates at zero, which is what some people thought they might raise rates, but what they did was they kept it at zero, but they increased their rhetoric and continued to stay hawkish for the rest of the year, meaning they're forecasting 3 rate hikes throughout the entirety of 2022, starting with the rate hike in March. Now, I looked at some futures on this, and actually, so my case or my take on this has been that the Fed will talk a big game, kind of like parenting, talk a big game, but not really follow through on raising rates because there's always going to be a reason not to. Well, in this case, I think that they will continue down that road, except for when you look at the futures market said that there's 84% chance that they raise in March, 1/4 point, and the other 16% chance that they are going to 86%, and that they're going to raise a 1/4 point, and the other 14% is that they're going to raise 0.5%, which would be insane. We haven't done that actually since 2000, so that's what, 22 years where they raised 0.5 point at one time. So I don't see that, and they're putting the odds of them not raising rates at all at zero. So I agree. I'm starting to swing that, okay, since they forecasted it so much that they're going to raise rates in March, that there probably is going to be a 1/4 point raise in the rates now. So I will change my tone, start to reflect that. Now, the bad news is, yes, that's going to hurt the markets, meaning we are actually going to start raising rates, to combat inflation right before a contentious, midterm election. However, what's that do? That generally takes the market down over time. However, what you're going to see is that it's largely priced in. I mean, we have dropped around 12% already for the year. And yesterday even struggled, as he was talking, the market was selling, almost made it back to green towards the end of the day. And today we're starting up. Do I expect that to last? Well, I think we're in a situation where it's the Fed, raising rates versus earnings. Earnings have come in great. So, that's kind of my take on what he said. Long term, are we adjusting portfolios based off of this? Well, I think it has already occurred. So, staying in best of breed names is what the game plan is with the based on the Fed's meeting yesterday.
Also yesterday, both Tesla and Intel released earnings after the bell. Both stocks dropped. What do you make of that?
Well, those are two high profile companies, right? So you have Tesla's kind of what I would call the new tech, champion, if you will, along with several others that are out there, but certainly in the core of the new tech. And then you have Intel kind of there as old tech. Well, both of them released earnings, and both of the stocks sold off. So let's take a look real quick. Here you can see how we're in the green already this morning. We'll see if that lasts. But as far as Tesla, you can look at the stock sold off pretty good right here. So when you look in the middle, you can see that black part down here at the bottom. So the stock, there was the earnings release, the stock dropped pretty significantly, and then it started climbing back up. And then this morning, it looks like it's found its way into the green after being in the red all morning. Two big announcements from Tesla there is Cybertruck, not this year, no new vehicles this year. So everybody anticipated the Cybertruck would make it in 22. It won't, it'll be 23. And the other part of it is Tesla said that, there's been hope for a $25,000 Tesla, an economy Tesla, if you will. And Elon Musk said that's just not happening. So even with that kind of bad news, if you will, the overall earnings were such that it looks like the stock's recovering and going higher. Now, when you talk Intel, here you have a company that's old tech and it's trying to reinvent itself. Several companies have gone down this road. IBM has struggled with kind of maintaining this new tech, pivoting to new tech. It's not easy, but Intel does have a new leadership team. They're not exactly new anymore. They've been in place for a while, but as you can see, Intel crushed earnings and the stock gets hit right after the earnings release there, all the way down here, kind of climbed back to even, and then is selling off into today. I'm not so sure that I think Intel's doing great things. They did obviously take a big punch to the nose when Apple started making their own chips with the Apple M1 chip, which is fantastic. But I think that it's not so much that Intel's doing bad, it's that money is going elsewhere in technology. So everybody's got their technology budget. I love investing in technology. I just think it's finding a brighter future elsewhere than Intel's, which is going to, even though Intel's doing the right things, I think that's going to continue to challenge Intel's stock.
Last question. Blackstone released earnings already this morning, and Apple released earnings today after the close. What do you think of the pre-market move in Blackstone, and what do you expect from Apple?
I've always been a big fan of Blackstone. Been invested since I found out about it. Steve Schwarzman started the company in 1984. He started with less than $1 million, and it's grown into the multi-billion-dollar firm that it is today. I've read his book on how he did it, and when I thought of starting my company way back when, I was like, oh wow, it's kind of a pipe dream. I don't think we'll ever get that big. But certainly a case study in what can happen when you have a bunch of people, you assemble a fantastic, smart team and invest in good things that get some good returns, right? Blackstone's done that. They've done that year over year. This earnings release, you can see the stock down here. We're looking at a one-day chart. Let's go to a one-year chart. The stock has run up from 75 through the course of, into late November, and then it started the sell off with everything else in technology. It went from 140 down to 110 or so, and now it's starting to bounce up. Obviously, the long-term future for Blackstone is fantastic. The Blackstone investments don't care if interest rates would go up, down, sideways, doesn't matter. They're going to find the best deals that are out there. So it's a really good place to have your money, not only in the stock, the BX ticker, but also they offer several private equity placements, which I'm in personally, and we have clients in as well. They did raise their dividend of $1.45. Overall, their yield, they have a weird dividend distribution sort of thing since they're private equity. Overall, they yield about 5%. So you can even have people in retirement still invested in the stock because it does pay that nice juicy dividend. So I think the future is bright for Blackstone. Does it get back to 150 anytime soon? No, it's going to be in that, hey, the market may continue to sell off, but it's one of the best of breed names that you pile money into. You just hold through whatever dip is out there. As far as Apple today, that's going to be the big question is, does Apple beat earnings? Almost assuredly so, right? Everybody is. The economy, you saw a banner earlier about the economy is just growing like gangbusters. That's not helping the inflation scene. But yeah, Apple, it's if you look at the one-year chart on Apple, same looks like all the other charts, right? Kind of peaked out at the end of 2021. It's been part of this 2022 sell-off, the reset, if you will, that pricing in of the interest rate hikes. So down here at 160, I think it's a screaming buy as far as what's going to happen after the bell. You might see an initial move down just because I think the markets tend to get negative real quick. So even though Intel will probably beat numbers, the market could sell off. But by the time you get to the conference call, which is half an hour after the earnings release generally, and Tim Cook talks and their whole leadership team talk about what's coming new for Apple. I think there's a lot of products coming out with the iPhone 14 now. It's kind of crazy to even say that. And a lot of other products are expected to come out in September, October. Well, as you know, markets look forward and you have to anticipate the anticipations of others. So even though we have the headwind of the Fed, I do think Apple is going to continue higher this year. Maybe not get back to the 180 level that it was touching late last year, but certainly going to move up, in my opinion, from where they are right now. So I'm very excited about the Apple earnings release today, and I will be sitting there staring at it for sure.
Thank you, Steve, for your commentary and analysis. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.
All right, thanks, everyone.